Tiger Brands is optimizing its portfolio. South Africa's biggest food producer is selling its 24% stake in Empresas Carozzi in Chile. That's in a deal worth just over 4 billion rand. The firm acquired that interest in Carozzi back in 1999 to facilitate an expansion into the Latin American region. But it says further expansion is no longer a strategic priority as it's looking to focus on its domestic business. The proceeds from the sale will be redeployed into Tiger Brands' core business, and once the company's investment requirements are funded, excess cash will be returned to shareholders in the form of share buybacks and/or special dividends. Shoprite posted half-year sales growth. Africa's largest supermarket chain says merchandise sales from continuing operations rose by 9.6% during the period. The bulk of that growth came from the group's core business, Supermarkets RSA. These figures exclude the performance of its furniture business, which is held for sale. It also excludes the impact of hyperinflation in Ghana, which Shoprite says is minimal. Woolworths has flagged lower half-year profit. The retailer expects its headline earnings per share to decline by up to 27%. This is largely due to lower contributions from its apparel businesses at home as well as in Australia and New Zealand. That performance offset strong sales growth from its food business. More detail will be provided when the retailer opens its books in March. AVI, meanwhile, is eyeing an improved interim performance. The consumer goods company says its interim revenue rose just over 1%, and it expects its earnings to rise as much as 10%, supported by sound growth in its operating margin and operating profit. AVI's brands include Five Roses, House of Coffees, Bakers, Lanthric, Kurt Geiger, Spitz and Green Cross. Tax had a good festive season. The property investment company says its retail experience hubs performed strongly, driven by the Black Friday shopping period, and generated 3.1 billion rand in turnover during November and December 2024. That's just over 5% higher than the comparative period. Tax added that total foot count, that portfolio increased by 4.5% year-on-year in November, but declined 0.9% in the following month. SA's fiscal policy remains the Achilles heel of the economy, with runaway municipal debt presenting a risk of further bailouts for Eskom. That's according to Coronation Fund Manager's head of fixed interest, Nishan Maharaj. In a note, he's also suggested that the National Treasury would find it difficult to follow through with its MTBPS commitment to not bail out cash-strapped Transnet. Maharaj joins an emerging consensus in the investor community that the freight and logistics group needs shareholder support. Further afield, the banking industry is in for a major shake-up. This with HSBC's plan to exit investment banking in Europe, the UK and the Americas. Here's more detail in this package report.
HSBC is preparing to wind down its M&A and equity capital markets businesses in Europe, the UK and the Americas. A memo sent to staff on Tuesday revealed part of a major shake-up of its investment banking operations. Europe's largest bank is working through a major cost-cutting exercise. The sweeping overhaul is aimed at streamlining costs, tightening focus and improving accountability of performance. But analysts have raised questions about the scale of savings that can be achieved and which parts of the business would be impacted. In the memo, CEO of HSBC Bank, Michael Roberts, said that the lender will retain more focused M&A and equity capital markets capabilities in Asia and the Middle East. Although it acknowledged how unsettling the news would be for HSBC bankers working in regions that advise on deal-making and corporate equity raising firms, such as through initial public offerings.
And DeepSeek still has tongues wagging post the tech rout it sparked yesterday. The Chinese nation beams with pride over the discount artificial intelligence model. It landed the app's founder a meeting with Chinese Premier Li Xiang. Let's take a look.
The founder of Chinese startup DeepSeek was little known until this week when the company burst onto the international scene. These images from state broadcaster CCTV show Liang Wenfeng meeting with Chinese Premier Li Qiang. Images from the report showed Liang meeting with Li and other officials. Xinhua news agency said the meeting was a symposium for business people and industry experts. The launch of the low-cost Chinese artificial intelligence model proved popular on the streets of Beijing. Locals said they were very proud of the AI startup.
I feel quite proud of it because as a Chinese citizen, we have this AI research and development that has become a global sensation. I feel, first of all, especially proud of that.
DeepSeek's emergence led investors to dump tech stocks globally. It saw market watchers question the sky-high valuation and dominance of AI bellwethers. US giant Nvidia is the poster child of the AI boom in recent years, but it saw shares sink 17% on Monday. It wiped $593 billion from the chipmaker's market value, a record one-day loss for any company.